Okay, nice to see everyone here. Good morning or good afternoon, everyone. Welcome to the Nautilus trading system and what it means. What in the heck are all these charts doing right now? Let me explain to everyone. We have a bunch of new people on here trying to figure out what the Nautilus trading system is all about. And I'm glad you're here so we can introduce this product to you. It's a fun, exciting product if you trade futures for a living, like we believe a number of people do. This system, which we call the Nautilus system, presented by Market Research, we're a firm that does research and advise clients on trades, etc., etc. What you're in right now is you actually are in our trading room or our chat room. And what happens throughout the day, you will hear us talk about these 5 markets that we watch. Why these 5 markets? Well, everyone likes to trade the S&Ps. Obviously, the S&Ps are the mainstay of everyone's look. It's a function of the U.S. stocks, but you also trade the crude oil, the gold, the euro currency, and the Canadian. And the reason why we trade these 5 contracts and we support these 5 contracts, we believe these are the best trending markets out there. We do use candlesticks. That's what you see right here. And I'm going to show you a little bit some of our strategies that we use. Okay, we're usually flat. In fact, 99.9% of the time, we are flat at the end of each day. We come in fresh the next day and just wait for our signals to show up. Okay? If you notice now, there are 3 different time frames of these charts, and I'll show you what that means. Okay? The first chart is our 5-minute chart. We use our 5-minute chart for entry strategies. Okay, we want to be, this is a trending type system, but we don't want the old trending systems that are out there. They've got to break a big deal before you finally get in. We want to be the first ones in, and we want to be the first ones out. Okay, this is one of the reasons why we use 3 time frames. Notice this time frame here at 8:30 in the morning for the crude. You can see at 8:30 in the morning where our 30-minute chart is, and then again where our 2-hour chart is. Okay, so what in the heck does that mean? This is what we use for our tools. Okay, we use Bollinger Bands. We use the middle Bollinger Band. We've made that a moving average. And then we have a shorter time frame moving average. What this does, this situation right here, this gives us a bias, which is very important. So we have a negative bias on this market on my 2-minute chart. Why? Because my short-term mover is trading below my middle band. Okay? So what does that mean? Say I'm not here at 6 in the morning, but we do get here about 7 or so. So when I walk in, I say, okay, I have a negative bias on my crude oil. Okay? This moving average, which is very important to me, okay, which would be resistance now, my longer time frames, I go over to my 5-minute chart and I say to myself, okay, as this hits my target here, this price right here, and I'll blow this price up. This price right here, okay, is my short-term moving average on my 30-minute chart. Now I have a negative bias, which means on my 30-minute, my 2-hour chart, my short-term moving average is below my middle Bollinger. Having the correct bias is very important. Okay? Having the correct bias is very important. Now you see the different colors. The green meaning up, the red meaning down, and the black meaning indecisive. Okay, the black means indecisive. But what we try to do is we try to figure out what change looks like and what continuation looks like. Okay, that's what the Nautilus trading system is all about. Change and then continuation of that change. And I'll show you what that means in this crude oil. Pretty fantastic, really. Since this level this 81.99 is my short-term mover on my 30-minute chart. I have a negative bias, so I am looking for sales. And as soon as my short-term mover goes below my middle Bollinger, this is how we do it. We risk a bar to catch a trend. And I'll show you what that means. Once this bar here, this decreasing black, okay, this could be my point 1. We'll show everyone how to draw the correct channel, which I'll show you in a little bit. But since I'm in a negative bias, I'm looking for this scenario, this decreasing black, increasing red. So once it takes this bar out, this decreasing black bar, as we try to rally, it's rallying on lower volume, which is important to me. The Nautilus trading system uses volume, and it's very important to us. But once we take this low out on this bar, and as long as this bar is increasing red, increasing volume, and we use prorated, and I'll show you that in a little bit, this is our trade. This is our trade. Once we take this low out with this bar, that puts us into sales. Now I believe I'm with the trend. Remember, my 30-minute and 2 hours are in sales. And again, what puts me in sales? My short-term moving average is below my middle Bollinger Band. And when I start to see the same setup on my 5-minute, that's when we kick in. So we sell this on a new low. So we sell 68s. And my risk is the top of this bar. So I'm selling 68s and I'm risking 81.88s. It's a $200 risk. And as long as I keep making lows, and as long as I keep getting increasing volume, I believe I've caught the trend. Okay? So we're risking $200 here, but if you can see what happens here, all of a sudden now, that 81.88, my risk of $200 is turned into a $1,000 profit just by being with the trend. Okay? All right. You think I'm just picking this out of air? No. Let's go to the currencies. Okay? Let's go to the currencies, and you can see the same situation. What does change look like? Now, we have different change patterns that will teach you. Okay? One's a volume change pattern, where we go from decreasing green to increasing red. And what the black means, if the black is just retracement, and then we get continuation of the channel, decreasing black, increasing red. This is what we call a 0.3 strategy. Okay? Now, what's my bias on my longer term charts for the euro currency? Oh, this is sick. Not only do we have a bearish engulfing up here, which was tested, and we'll teach you how to deal with the bearish engulfing. And that's one of our change patterns. If we get a volume change pattern with a Japanese candlestick topping pattern, those two are very powerful together. And I'll just show you one of our strategies. When you have a bearish engulfing, which means this body engulfs this body, okay, what we do is we take the body, which is the opening and close, and we cut it in half. So this is 68 to 27, about 40 points. So we take 20 points. We take 20 points off the opening, which means 48s. So I'd be selling 48s, and I'd be risking the high of this bar because we have increasing volume and a Japanese candlestick read. Remember the price, 48s. I'm risking 68s. The next price goes to 53, gets us in at 48. And all as long as we start to get increasing volume and we start trading below our movers, and then the mover is crossed, okay, this price is 40.48. Today, we were trading 37.26. That's 300 points in the euro currency. Okay? Now, what I want to show you is, what is my bias on this chart? And the answer would be, I have a negative bias. I have a short bias. Why? Because my short-term moving average is below my middle Bollinger. So let's say I get into work here at 8 o'clock. This is 6 o'clock. I get to work at 8 o'clock or 7:30. Okay, remember this price, 138.23. Let's go to my 5-minute chart. 138.23. What is that? What is that important to me? Okay, I can see the markets coming up, and let's go back to the regular chart here. I'm sorry. 138.23. Huh. Why in the world would I sell this market after what is a beautiful up channel? And I'll show you this before I show you this 128.23s. 138.23s. Remember this price. I want to show you what a volume change pattern looks like. You see the decreasing red, increasing green? That means that the market's trying to sell off, but it's losing steam. You can see how we're making new lows, but the volume is falling off. If I, in fact, take this high out with increasing volume, this could be the start of our channel. And all channels have 2 or 3 points that are very key to us. The one, which is the beginning of the channel. Okay, let me draw that for you. Okay, every channel has 3 points, and this is what we'll teach you how to do. Okay, this is our first lesson in our 8-course education program. What we do is we teach beginners point 3 strategies. Okay, now let me show you what it means. Remember that 138.23. Okay, here we go. We believe every point 1 in a trend always has to have increasing volume. So in fact, if we believe this is our 1, you can see it as it tries to, our point 1 is where the channel starts. Our point 2 where it stops at the end. What happens between a point 2 and a point 3 is very important to us because you can see the market trying to sell off on decreasing volume, which tells me this is just retracement type activity as we test this low. Now, one of our point 3 strategies is, see this decreasing black bar? I'll show you to here. This black bar is our information bar. If I take this high out on this bar, we buy it and we risk this bar. So in the euro currency, we buy the 138.02s on this bar, risking 137.90s. It's about $120 risk. But the decreasing black, all I need is the increasing up volume for me to have a point 3. Now remember my longer term charts, and this is what's very important to us, because this channel is going against the trend of my longer term charts. Okay, now let's go back just to give you a reminder. Okay, 2 hours, this price right here, our short-term moving average, which we regard as resistance. In between the middle and my short-term is what we call our selling zone. So it's hitting my price of 138.23. Watch this. This is a thing of beauty. Okay, now we do this all the time. This is our profit-taking strategy. We have 5 or 6 strategies, all well-defined.